For the first time, we're going to follow this through all the way to a fourth step, which is preparing the financial reports. That's basically the point of accounting, is to make these reports. So what we want to do is turn our trial balance into an income statement and a balance sheet. So looking at the income statement, we'll start down the bottom and we'll begin with revenues. So knowing my rules of debits and credits, I know revenues always have credit balances. So I only need to look on the credit side of this trial balance for any revenues, and I can see here the only one there is sales. So I'll enter that and say my total sales was 7760. We've learned that we now take away our cost of sales expense. Expenses are debits, so we're going to look on the debit side of this trial balance to find our cost of sale expense. And we see it there, 3710. We'll put that in, and that'll give us our gross profit of 4050. The next section we'll need to move on to is less other expenses. So again, expenses are always debit, so if it's not on the debit side, it's not going to go on under this heading. So we've got the wages, insurance, the advertising and the stationery. We'll put the numbers in the first column, total them up in the second. So we'll get total other expenses of 1630. And here's our completed income statement. We've got a gross profit of 4050. We're going to less away the other expenses, and that'll give us a net profit of 2,420. Now we're going to need that number in a second. It's going to be important when we do our balance sheet. But for now, we need to use all of these numbers. They have to go on one report or the other, so we've still got quite a few left. So everything else must go in the balance sheet. So we'll start the balance sheet down the bottom here. We've got current assets. So assets have debit balances. So we're just looking for items on the debit side. So the only current assets there were cash at bank, debtors and stock, so we'll put those in the first column, total them up in the second. However, assets can also be non-current, so we can see we've still got some things that haven't been ticked off on the debit side. So we've got the shop fittings and the computer, so we'll list those and total them up for a total non-current asset value of 26,500. We'll start with our current liabilities. We know that liabilities always have credit balances, so we're going to look on the right hand side of this trial balance and we'll find creditors and GST, and we'll put them in the first column, total them up in the second. Then that leaves the loan. The loan is going to be the only non-current liability there. However, we can see we're still left with capital and drawings in the trial balance. We haven't used those numbers yet, so we need to allocate them now. So to do that, we're going to do that in the owner's equity section. So we'll start with the capital figure, which is 41,300. What we want to do is add in the net profit, so we can figure out, we'll go back to our income statement. We figured out our net profit was 2,420. So I want to add that in, and then that'll give me a subtotal of 43,720. What I can do now is subtract away the drawings. They're the only figure I haven't accounted for here. And once I've done that, I've now used every figure. So I'll take out the drawings, and 43,720 less drawings of $100 will give me final owner's equity of 43,620. There's our completed balance sheet. What we need to do is total each side though. So we'll total the asset side, getting the current assets and non-current assets for a total of 59,813. But we also need to total our equity side of the balance sheet. So remember, the equity side is the current liabilities, non-current liabilities, and owner's equity. So we add up the three numbers in the right-hand column. We've got 4693, 11,500, and 43,620. That gives us total equities of 59,813, and our balance sheet does indeed balance.